Thank you, everyone. How are you guys doing today? It is wonderful to be back in Texas, and once again, I'd like to thank Gary and Kathy Leland for putting on an amazing weekend. It always brings a lot of great people together. Now, my talk today is called How the Eurodollar System Affects Bitcoin. And I will be honest with you, I named the talk long before I put together the talk because they had to put it on the website. But I knew that what I wanted to talk to you guys about today was the Eurodollar system. It's something that is a core part of my research. I feel like it's misunderstood. I also feel like the Eurodollar system and knowledge about it has reached somewhat of a level of mainstream understanding nowadays, where, and for those that don't know anything about the Eurodollar system, Eurodollar means a dollar that is held at a bank that is not in the United States, also known as an offshore dollar. Now, people understand, I think mostly in the financial press and financial media, that the Eurodollar system is an offshore dollar system that has been a problem and that people are trying to find a solution to. But the history goes way beyond some of the more mainstream narratives about it, and today I want to get into a little bit of that. It is widely accepted that one of the first examples of offshore dollar storage was done by the Soviet and Chinese communist governments in the 1950s. The action was a reaction to a gold seizure of Yugoslavian gold in New York during that time. And so the communist governments of USSR and China both decided to start storing dollars in Europe. And more specifically, a bank in France called BCAing, which translates in English to the Commercial Bank of Northern Europe, whose founder was a communist sympathizer. And so from that point on, dollars held in Europe for the express reason of not holding them in the United States for political reasons, a Eurodollar system was born. Now, people know that story mostly, that dollars started because of this geopolitical Cold War era dynamic. But that is not the whole story, especially because if you think about a financial system is not just about storing money. It's about shifting money through time via lending markets and interest rates, the time value of money. And just because the Russians wanted to store dollars in Paris doesn't make a Eurodollar system. That's just a parking spot for dollars outside of New York. The story that people don't know as well is that in order to get money to be lent outside of the United States, but in dollar denomination, it took an effort by somebody, some institution, some government, some bank, somewhere. The widely accepted narrative that dollars were the new currency because of Bretton Woods in 1944, dollars were the currency that needed to be used to fund trade activity and growth in post-World War II Europe. Now, while that is true, there were players in the city of London that made this happen on purpose. So in 1931, the United Kingdom, the British, fell off of the gold standard. I'll talk about in 1971 how Nixon took the US off the gold standard. But actually, this 1931 breakage of the gold standard in England, I believe, is more important to the story. Because at that point, the sterling, pound sterling, fell officially from the status of world reserve currency. The dollar ascended, and now the bankers in the City of London are looking at their home currency and saying, this is no longer the instrument that we should use to do what? What do bankers want to do more than anything else? Make money. And so in order to make money, the British bankers said, we want to use dollars. And so in a very ironic way, the fall of the sterling was actually the rise of the City of London as the international financial center. Because what started happening in London via the Eurodollar system was basically a synthetic dollar world in which British bankers could use dollar funding and dollar creation to speculative attack other currencies, for example. This idea of a speculative attack is decades old and actually originates from the early days of the Eurodollar system. Another narrative that is, I believe, more understood these days is this idea that dollars in Europe got there because of the Marshall Plan. And this is Harry Truman signing the Marshall Aid post-World War II. And so Marshall Aid were dollars that came to Europe to rebuild Europe. And so in that way, dollars made their way from New York to Europe, and they were stored in Europe. But just the storage alone does not make a system. Like I said, it is the lending market. So bankers in the City of London, and there were a couple key players, they lobbied the Bank of England, the central bank in the United Kingdom, and new rules and regulations were passed and presented so that the offshore dollar system, which is using another country's currency, could actually be done on a separate set of books at the British banks, so that at a British bank, you were looking at a sterling book, which was their publicly viewable book of lending, and then they had this separate offshore dollar book. And so in the regulation and the regulatory environment in England at the time, there were moves made to set up this parallel offshore dollar system in the City of London, even outside of the purview of the Treasury, Her Majesty's Treasury. So there are a lot of stories within the creation of the Eurodollar that I don't believe are as well known. That's what I want to talk to you about today and present to you some of these ideas so that we can think about what really is this offshore dollar system? Who invented it and who is benefiting from it? Well, I'm pretty sure I know who's benefiting from it. It is a synthesis of bankers between New York and the City of London that made this system go from non-existent to actually changing the fundamental qualitative characteristic of the United States dollar. You guys know the dollar to be the sovereign currency of the United States that used to be payable in gold coin, and that it is no longer payable in gold coin post-1971. That's what you guys know the dollar as. But I'm here to actually tell you that in the 40s and 50s, this Anglo-American banking elite took the dollar and removed its link with the United States whatsoever, because they gave themselves, nobody gave them the power, they gave themselves power to create dollars through the lending market in an offshore way, not regulated by the Fed, not regulated by anybody. The Bank of International Settlements in Switzerland actually started to identify this system in the 60s, and the dollar system that the banks put on in Europe and in the City of London, it removed the geopolitical link between the country and the currency. And so when you see today people saying the Fed prints too much money, that's why the dollar has lost its value, you're missing the point of what the banks have done to the currency in the decades prior to all the money printing in the last 15 years. The money printing of the last 15 years are actually simply a response to the collapse in part of this Eurodollar system that started to unwind in 2007. So there are a lot of narratives that are, I believe, hidden in plain sight. And blaming the Fed for the destruction of the value of the dollar as Bitcoiners is very incomplete. I'm not letting the Fed off the hook here. Understand that. And also, I believe that the Fed, using agency theory, is basically an agent for the banks themselves anyway. Anybody who's read The Origins of the Federal Reserve knows that it's the banker's bank, not necessarily the country's bank or the country's currency. It's the banker's currency and the banker's bank. But the return to laissez-faire money that was actually put on hold with this idea of the Bretton Woods system, which was a mandate that the dollar had to be worth this amount of gold and that other currencies had to be worth this amount of dollars. That's not a free market for money, the Bretton Woods system. The Anglo-American bankers identified that. They also said, we want to go back to free money. And they said the dollar is the perfect instrument because we can do this whole new offshore system in Europe outside of the Federal Reserve, outside of the US government, and we can basically co-opt the dollar for ourselves. And what started happening once we went to laissez-faire money, and this is before the fall of the gold standard in '71. So in the 60s, you started having the invention of hot money. If you guys have heard the term hot money, it's a term to use to describe money that is created very easily at a low interest rate that can be used to invest in other assets and drive up the price of other assets. Well, hot money was used to speculative attack currencies. Banks took too much leverage because of the new ability to just borrow synthetic dollars offshore, and you started to have banking crises, all before 1971. People also know about Regulation Q. It's one of the things that people know about the Eurodollar market. Regulation Q was a New Deal FDR measure, and it was a cap on interest rates in the United States. So it's a very easy narrative to say, if interest rates were capped in the United States, why wouldn't a bank in the City of London offer a higher interest rate and attract that capital away from New York to the City of London? Makes sense from a free, just a market perspective. That money will go to search for higher yield. We see that today, of course. But who's going to provide that instrument? Is it just that there was a cap so the money went looking for a home? Or were there bankers in the City of London that said, this is how we are going to do this? And so what you had in the 60s were the American banks themselves identifying this arbitrage and identifying that if they went to London and started branches in the city of London, that the American banks would be able to basically print money for themselves, arbitraging the interest rates across the pond. And what did we see in the 60s? But the Bank of England, in its monetary policy statements, adhering to the requests of the American banks that had moved into the City of London. So the Bank of England by the 60s was doing American banks bidding in a legislative environment in the City of London before the fall of the United States link to gold. This guy. This from 1971, this is what we associate with the fall of gold, is Richard Nixon and the closing of the gold window. But you need to keep in the back of your mind the system that developed behind the scene that made Nixon's closing of the gold window simply an inevitability and not actually any swift action or even nefarious action. It was just one of desperation and out of options. There was nothing that could be done to prevent the depletion of the United States gold stock at that time, running into the late 60s and early 70s. There was nothing that could be done. And every day that I continue my research in this realm, I believe that the Eurodollar system is the primary culprit, in that dollars no longer had a link to gold long before this moment because of what the bankers did to the dollar in the 40s, 50s, and 60s in the City of London. And it's not Brits. Who are we blaming here? It's not Brits. It's not the British. It's not the Bank of England. It's not Barclays. It's not the Fed. It's not Citi. It's actually the cities and the Barclays of the world that got together and started to influence policy. They did so with the assistance of the Bank of England. They did so with a half-blind eye of the Federal Reserve. The Federal Reserve sent delegations to the City of London to investigate what was happening. They basically said, okay, not much we can do. This is going to continue. And in that way, the dollar lost its link to the United States of America. I truly believe this. This is a headline from 1931. We think about 71, but I think that 31 is a date that we should have in our minds when money really started to break from gold. FDR's Seizure executive order was around this time as well. This is an easy image to project, to say this is who to blame and this is what is happening. The Fed spraying money at us. But it's a very small part of the picture here. This is not your main culprit. This is actually simply an agent that's implementing the policy that's best for the banking system under the guise of a dual mandate. Because when we look at when the Fed actually started to raise rates this cycle, it was long after inflation was clearly an issue. So try to read between the lines when we're looking at what the Fed is doing, or even blaming the Fed for the dollar's problems. It's not the first place you should look. It doesn't mean you shouldn't look there, but it's not the first place you should look. The first place you should look is here and here. So change your mindset away from the Fed has ruined the dollar. Now, Satoshi Nakamoto, in the first sentence of the Bitcoin white paper, so his introduction of Bitcoin to us all, says, I have invented or I have created a digital cash that you can use, quote, without going through a financial institution. Did he talk about without the use of a central bank, or without the use of a government issuer? Or is he talking about banks? Who has ruined the dollar? And what is Bitcoin the alternative to? And I'm not picking on Saifedean's the alternative, the decentralized alternative to central banking, because as we all know, a scarce currency is definitely an alternative to central banking non-scarce currencies. So I'm not dismissing that. But is Satoshi presenting Bitcoin as an alternative to central banks, or is it to banks themselves? It is both. And it's banks first. And that's what I'm starting to conclude in my research, is that it is the banks that have destroyed what we believe to be the value of our currency from point A to point B in time. It's not the government or the Fed. The Fed actually prints money to respond to problems that are going on in the banking system themselves. So the Fed is an agent reacting to things that it sees out in the economy. But in terms of creating money out of thin air, it is the banks that do it. You guys can find me and my work at thebitcoinlayer.com. My book is called Layered Money. And I appreciate your time today, and I'd love to take one or two questions. Thank you. Yeah.
Co-conspirator in what has happened, or is it really primarily the banks?
It's an excellent question. The question is, where does the fiscal profligacy fit in to the mix? With the creation of dollars outside of the United States, you also create a market for the marketable securities of the United States government. So treasuries find a home because of how many dollars are created by these banks themselves. So this idea that the United States, you've heard the concept of the exorbitant privilege of having the world reserve currency. It means that because we have the world reserve currency, people are defaulting into owning US treasuries, and that gives the government free rein to spend, and even spend beyond their means, without even interest rates going up to punish them for high debt loads. So because dollars are freely available around the world, it gives the world an ability to keep financing the debt of the United States, and it gives Congress that blank check. They don't have, people say that Congress, if we held them to it, they would have to rein in their spending, but nobody votes them out, right? Well, if interest rates went up, they would also have to do something about that. They would have to either rein in their spending, or right now interest expenses are skyrocketing on a nominal basis, but it's still well under the tax receipts that are covered, and they're able to print the money and borrow more money and just keep the system going. But when new treasuries come to market, like for example, next week, maybe 100 billion in new treasuries will come to market over the next few weeks. Brand new treasuries on a net basis. How does that get funded? By somebody's cash? Or is it 98% financed in the repo market, which is a collateralized lending market, which is often created synthetically offshore by Eurodollar banks? So how does all that debt come to market? Because somebody's willing to finance it. Who's that somebody? An offshore shadow money type of financial institution that gets to create dollars just by their book. One more. We can, yeah, go ahead.
Where do you go to track the activity of the Eurodollars and its impact on our money supply?
Great question. So in the 60s, the BIS, Bank of International Settlements, said, we're not really sure how to track the nominal size. And it in part has to do with this idea that in the City of London, there were regulations that allowed these books to be separate from each other. Now the Bank of International Settlements produces research that identifies the dollar deposits held in non-US banks and actually gives us a nominal amount. It's somewhere between 10 and 15 trillion dollars as we speak today. But that number is only a fraction, because what we really have to think about is the power to do FX trades. And the power to do FX trades means that if I'm swapping $1 billion for $1 billion worth of Japanese yen, that $1 billion never has to exist. It's just a paper transaction, and the mark-to-market value of the trade is what is sent to and from between banks and banks, or banks and investors, on a daily basis. Now, we also know from the Bank of International Settlements that the total number of derivatives, dollar-denominated derivatives across the world, are north of $500 trillion. And so I hate using those notional numbers because they're so large that it loses relevance. But the answer to your question is that it's somewhere between 10 trillion and 500 trillion. I know it's at least 10. I know it's not 500, but we don't completely know how much, because it's not just dollar deposits. It's repo, which is collateralized lending. It's FX, which is the big one here. The power to do FX trades out of the City of London. That is done in the trillions on a daily basis. 3 to 5 trillion per day is traded in FX in London. That's my time, guys. Thank you so much, and I hope to see you tonight.
Grandpa, why do you have so much Bitcoin?
Well, it all started in the year 2023 when I attended a conference called BitBlockBoom.
What's BitBlockBoom, Grandpa?
It was a conference where people talked about Bitcoin. This was way back when we used something called the US dollar for money.
What? Bitcoin wasn't always the world's money?
If it weren't for great speakers at BitBlockBoom like Jimmy Song, Adam Curry, and Preston Pish, we'd all be living in pods and eating bugs. Instead, I was able to avoid fiat enslavement and secure generational wealth.
F***ing legend.
Be the legend your grandchildren deserve. Experience the best Bitcoin conference out there and join the Bitcoin revolution. BitBlockBoom, the only conference for true Bitcoin maximalists. Book your tickets today at bitblockboom.com and use the code BBB1 for a special discount.